What's up, everybody? Nate here. The United States economy and markets around the world are in a super tough spot right now. You have inflation, which just hit a new 40-year high in January 2022. You have the anti-work movement, a labor shortage, and the Great Resignation wreaking havoc on businesses and our economy right now. And of course, the Russia-Ukraine conflict is sinking markets all throughout the world. But that's not all. There are some brand new inflation numbers that are putting some extended pressure on small businesses in the United States and the rest of the world, as the producer price index just hit a new record high. Not only that, but there has been a massive shift in the Ukraine-Russia situation, which may end up completely flipping markets in 2022, meaning the finances for everyday Americans and our economy is in danger in 2022. So today I want to talk all about what's happening in our economy and markets right now, and the big changes to inflation and the Russia-Ukraine conflict that could end up shifting our economy and markets for a very long time. But before I break all of this down, do me a quick favor and hit, smash, or destroy that thumbs up button below, and ring that notification bell too. Both of those two things are completely free, and they help to show me that you like this video, that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about the brand new inflation numbers. So by mid-February 2022, the producer price index was released, and it showed how producer prices are changing from one month to the next, particularly from December to January 2022. And they went up faster than ever. Let's check out the numbers. Wholesale prices on the consumer price index went up by 1% in January. And from January 2021 to January 2022, prices for producers actually went up by 9.7%. That is the highest we've seen since 2010, and way higher than the Dow Jones estimate of around 0.5%. Core CPI, which excludes food, energy prices, and trade services, only went up by around 0.9%, which is still over double the 0.4% estimate that Wall Street had. For the month of January 2022, the price for goods went up by 1.3%, and services went up by 0.7%. Energy prices jumped 2.5%, and food went up a whole 1.6%. And remember, this is just over the past month. For the month of January, around 58% of businesses reported paying more for the same goods and services. Not everyone though. Actually, 4.5% actually reported a decrease in the amount that they're paying for their products. However, 58% of businesses reporting paying more is a new record. We haven't seen that many businesses reporting an increase in the amount that they're paying for their things since around 2001. Now, as far as producers go, they actually have a pretty good outlook on not paying more for things in the future as our supply chains start to improve. According to the Labor Department of the United States, inflation on the producer price index is set to be around 5.8% in January 2023. So it's actually going to decrease by around 4 or 5% according to the Labor Department. That's actually down from 6%. So that's showing that our supply chains are starting to get better and that companies are not having to pay so much for all of their goods and services. Over the next 3 years, expectations for the producer price index on inflation are actually at 3.5%. So they're saying within the next 3 years, inflation in that index will be around 3.5%, which is still a bit elevated, but way lower than what we're seeing right now. Typically on the producer price index, it hovers around the 1 to 2% mark. So over 3 is definitely high. It's not impossible to actually see negative prices in this index because we don't know what's going to happen throughout the rest of the world. Most companies in the United States get their goods and services exported into this country. So depending on what goes down in those countries, prices can go down too, but we're not sure about that just yet. Now that you have all the numbers, what do they actually mean? What does inflation at 9.7% for producers mean for businesses and companies all throughout the United States? Well, it means the same thing as it's going to mean for consumers. Businesses have to get their products from somewhere, and they're now paying a lot more for all of those same products. That hurts our economy a lot because businesses aren't going to take a hit in their profits. What they're going to do is trickle those additional costs down to the consumer. And right now, the consumer is hurting even worse because of inflation. In January 2022, inflation went up by a rate of around 7.5% on the consumer price index. That basically shows how much consumers are paying for all of their goods and services. That number has gone up steadily over the past 20 months. So we've felt inflation at an elevated level for almost 2 years now. And these two inflation numbers basically work together because producers set the price of all of their goods and services. But then you have production lines that are sometimes overseas and sometimes in the United States setting their prices on what they're going to sell to businesses. If businesses have to pay more, then those costs go on to the consumer. Right now, the consumer is so stretched because everything is costing them more, because everything costs more right now, leaving a consumer that's basically going to have to pick and choose on what they want to buy. Some things consumers absolutely have to buy, like food and shelter costs, but those are going up too, which means when it comes to some of these other businesses, they're going to start buying less because inflation is so high. Now, with inflation being this high, the Federal Reserve has talked about kind of reeling it in 2022 and taking all the steps necessary to start dropping it. They've kind of had this rhetoric and narrative over the past few months that they're going to start raising interest rates and pulling their quantitative easing measures from the New York Stock Exchange, although they haven't really started doing any of that yet. Things now are getting pretty serious though, because most investors now believe that we're going to see a 1.75 percentage point increase in interest rates by the end of 2022. That would be the most aggressive the Federal Reserve has ever gotten on inflation. And most Fed presidents agree that something similar to this has to be done in order to fight inflation this year. And while this inflation issue is affecting businesses and consumers alike, small businesses are getting hurt the most by this inflation problem. Your big corporations in the United States are equipped to deal with inflation. They're going to survive even if inflation continues to rise because they gain money in a ton of different ways. And they have locations all throughout the world, so it's not just the United States. For instance, McDonald's doesn't just have locations in the US, they have locations worldwide. So even if things start to go south in the US, well, they're still going to pick up business in other countries. The problem right now, though, is every single country is battling with inflation because just about every country in the world had similar economic lockdowns and stimulus policies to the United States in 2020 and in 2021. With all of those trillions of dollars being printed in 2020 and in 2021, people went out and spent that money, which led to supply chain issues and inflation reaching new record highs. So larger businesses are most likely going to be okay here in terms of inflation. However, your small businesses are the ones that are truly struggling. Most small businesses haven't been affected as far as prices go on the producer price index. Yes, most are reporting that they're paying more for a lot of their goods and services, but it's really not all that much at this point. One of the things that's hurting small businesses the most right now is our wage crisis in the US. So as inflation starts to rise, wages and salaries have to go up too, because if they don't, then you have a population of people who aren't making enough money to afford all of the things in your economy. On one hand, if businesses lower their price of everything because they want more people to buy them, then naturally more people are going to buy those products. However, what that leads the business to do is have less products. So not only do businesses make less products in that situation, you now have major supply and demand issues because businesses can't afford to keep producing more and more things at that price, which means we'll have less in our economy, less money circulating around because people are naturally going to stop spending so much money. There's literally nothing to buy, which is the problem in the US right now. So companies have started to raise their wages in 2021 and 2022, albeit they have not raised them yet even close to the inflation level. As like I said, inflation for consumers is around 7.5% and wages have only gone up by around 4 or 4.5%, which means workers have lost 2 to 3% in their wages over the last year. That's really tough on small businesses because small businesses don't make the same kind of profits and aren't public like a lot of these massive corporations are. They have one stream of income, and that's selling products and services. If they don't sell enough of that, then they're basically going to go out of business. And unfortunately, that's what we've started to see in the US in 2022. Because these small businesses have had to raise their wages in a response to inflation and to find good employees to work their stores, they've also had to raise the price of their products in order to cut their margin. Businesses have to be able to make a good amount of money in order to start growing and to hire more employees and to put money away in savings. They can't do that if every single dime they have goes back to that one single business and their employees. Small businesses try to have a little bit of a buffer, which is why in some cases you'll go to small businesses and the same products that you'll find at Walmart and Kroger are actually going to cost you more. And in a normal economy, when inflation isn't raging at 7 or 8%, a good portion of Americans actually prefer to shop at these small businesses because they're helping out the community, a store that is only found in that community. However, the problem right now is these big, massive corporations are actually able to undercut costs because they know Americans are struggling right now. And if you can go get a gallon of milk at Walmart and save yourself $1 or $2 than at the small business, well then where exactly are you going to shop at? That and the wages problem has basically put thousands of small businesses all throughout the United States out of business. Not only that, but obviously the pandemic is still raging in the United States too, which means just in general, people are out less shopping. And a lot of these small businesses don't have the massive online presence that your big box retail stores are going to have. So if people don't go in and shop at those stores, then they're not getting any money from the community or any consumers. Unlike your big box retailers, where even if you don't shop at Walmart, you can put in an order and then go pick it up. Or you can shop online at Kohl's or Amazon and still get everything that you want without leaving your house. That means the United States is facing a massive shift in our economy in 2022. A lot of these small businesses are probably going to disappear or are going to be massively affected by what's going on, which means we might end up with only big box retailers and massive corporations on every single corner from now on. And I mean, one thing about that is it's convenient. I mean, Amazon is super convenient. You can go on there and pretty much get anything that you want delivered to your house in just a matter of minutes. With that being said though, Americans are increasingly getting more comfortable with paying that convenience tax. Now, it's not actually a real tax, but it's something that these businesses tack on, like shipping fees or handling fees. In reality, for many businesses, shipping and handling doesn't really cost them much, but they still charge you an extra $3 to $5 just to ship that box to your house. Or because it's such a fast delivery time, it'll end up costing you $10, $20, and even $30 for something that if you went to the store and bought it, might only cost you $5 or $10. Americans are constantly overpaying for all of the same things, and that's even just beyond inflation. They're paying a lot more for all of the same things because of consumerism and the pandemic. Small businesses just can't compete with that. And it's been happening for a very long time now, but inflation has really pushed small businesses over the edge. On a survey of over 2,227 businesses on CNBC, 75% of business owners say that inflation is only going to get worse over the next 6 months. And 71% of small business owners believe that the federal government and the Federal Reserve can't stop it now. Not only that, but our supply chain is hitting everybody right now, including small businesses, because even if you do still have a ton of people that manage to go to your small business, in this scenario, you've survived the wages, you've survived inflation, and now people are actually shopping at your store. Well, you still have to buy all of your products. And if they go to your store and can't find the things that they want, then there's a big chance that they're probably not going to shop there again. But with that small pro of convenience for our economy, this spells out bad news for everything else, because big corporations basically taking up everything hasn't really worked for the United States yet. I mean, yes, big corporations coming to the United States create a lot of jobs. Tons of new stores opening up for McDonald's or Walmart or Kohl's or any one of these big box stores means more people can be employed. The problem is the more stores that they open up, the more costly those stores become to a business. So now they're basically paying each individual worker less and less as they open up new stores. So if employees are not being paid right in the first place, and they're probably not going to work at those stores. But if our economy is only filled with corporate jobs like that, that pretty much forces Americans to take a job that they don't really want for a low wage. Which leads us into the anti-work and Great Resignation. Millions of Americans have been quitting their jobs over the last 2 years, and they're quitting for a variety of different reasons. For one, they're not being treated right by their employers, and that's been going on for a long time now. The pandemic really opened up a lot of people's eyes though, because they were working long hours for low pay, and they were kind of expecting something by the end of the pandemic, but they never really got anything. So they quit their jobs. The other is inflation, because wages haven't gone up nearly enough for people to buy all the same goods and services. They're quitting their jobs and looking for a new job that's going to pay them well. And of course, you have a shift from working in the office to work from home culture right now. Many Americans were able to work from home during the pandemic, and some businesses are trying to get them to go back to the office. Millions of Americans don't like that. They like the freedom and the savings they get from working at home, so they're quitting their jobs if that's a requirement. And then of course you have the anti-work movement, where millions of Americans are saying that they don't want to work for a big corporation making someone else money. They want to make money for themselves. They don't want to make someone else richer. And all of this has been building for years now. But right now it is about to explode in the United States, because the issue is we're already facing a massive labor shortage and supply chain issues and inflation. If all of these continue to go up, then most Americans are not going to be able to afford anything. That could eventually lead your economy into a recession and a depression, because the majority of Americans don't want to be exploited for their labor right now at these big corporations. They're not going to work any of those jobs. That's going to be tough on businesses, because now businesses aren't making a profit. So you can expect your earnings reports and stocks to essentially tank over the next few years. Not only that though, these big corporations can expand, and it's going to be really hard for them to pay all of the employees that they have right now, the ones that are actually willing to do the work as it is. Stress though on those employees is probably going to make a bunch of them quit as well, but overall, they're not going to be able to make anything, which means Americans, the ones that are working, are going to be buying less. And if they can buy anything that's on the shelves, well, they're probably going to continue to pay more for it. Millions of Americans not working, businesses struggling, and inflation continuing to rise in the country. Well, that is bad for our United States federal government, because they need money too. And they need their economy and the public to be doing well in order for the country and the future of the country to survive. Ultimately though, they are not gonna let the United States fail. It's never happened in the history of this country, and why would it? When Federal Reserve Chairman Jerome Powell controls the money printer, he can basically make it go brr whenever he wants. And if that's the case, then businesses can't fail, because the federal government will come in and bail them out. The American public can't fail, because the federal government and the Federal Reserve will just print stimulus if they want people to start getting money and go out and buy things. As long as people are getting money, they don't care where it's coming from. They're gonna go out and spend it. And businesses don't care where the money's coming from. They just want to continue to grow. They're thinking long-term and international here. They're not just thinking about the United States and their policies. Which means the Federal Reserve and inflation is only going to get worse, because they're just going to continue to print and institute these easy money policies and give people even more free money. Meaning our economy could be in shambles. And I'm sorry to say this, but it gets worse. There is a situation happening far overseas that is completely out of the federal government's and American businesses' control. I'm talking about the Russia-Ukraine conflict, which has been going on for a few months now. Basically, Ukraine was slated to become a brand new nation of NATO. However, Russia did not like that. Because of Ukraine's proximity to Russia, they didn't want a NATO country being so close to them. And not only that, Russia believes that Ukraine should be a part of its country. And this is a super complex geopolitical issue, and we're not really going to get into all of the politics here, but this problem is going to drastically affect our markets and inflation in 2022 if it starts to go even more south. Our economy is hurting right now, and it's barely surviving with everything that's going on. Now, there is a potential for it to start going back up if the Federal Reserve and the federal government take the right steps right now. But something that they cannot control is what Russia is going to do. You see, Russia is a massive supplier of worldwide commodities. We're talking natural gas, oil, nickel, copper, coal, wheat, and much more. All of those things are super important to the United States economy. And the problem is the United States is heavily backing the Ukraine right now. So if Russia decides to put sanctions on the United States and make them pay more more for all of those things I just listed. That means inflation for those industries is going to go through the roof. As a matter of fact, some experts are saying that gas in general could actually go up to $124 a barrel. That would be the most in a long time, and it would send gas prices through the roof, which means Americans are going to be even more constricted on what they can spend. Not only that though, that's a situation if Russia just decides to tax us more for all of those goods and services. What if we talk about exporting? The United States gets most of its products through exports. We don't really make a ton of things right here in this country, mainly because it's expensive to do so. If Russia decides that they're just not even going to send us anything, well, now the US has to find other places to get those things because our country still needs them, making the prices not only go way up, but our supply chains get even more thrown out of whack. It's worth mentioning too that in the United States, there is a big push right now to start developing a lot of these things that have normally been exported into our country right now, especially like gas and oil. That way we rely less on a lot of these outside countries for all of our goods and services. But it's definitely not there yet. So in the short term, that could tank our economy. And that's only the beginning, because if Russia actually decides to go through with its plans to invade Ukraine, well, that's going to be a tough decision for the United States, because now they might be entering a conflict with Russia, which means more of our economic resources are going to be flown overseas. That's going to cost us too. And something else that's brewing right now is China may end up backing Russia in its invasion of Ukraine. And if that happens, our economy could sink even more because we get a ton of resources and produced materials from China. If they decide to block us or raise taxes through sanctions, well, now it's going to be even hard for businesses, small businesses, and consumers nationwide. So with all of that being said, here's what you need to know as an American citizen right now. Inflation is not going away in 2022. And even though the Federal Reserve has now decided to get super aggressive with inflation, they haven't started yet, and they're probably not going to start until March of this year. With that being said though, they can't completely lower inflation because they can't do anything about our supply chains and they can't do anything about a Ukraine-Russia conflict. Meaning the Federal Reserve and the United States government pretty much have tied hands here. We're going to continue to lose small business after small business if inflation doesn't get under control. These businesses can't continue to pay people even more and then not have people shop at their stores and instead choose the big box retailers every single day. And again, you can't blame the American consumer here because they're constrained. They can't afford to pay $2, $3, $4, and even $5 more for the same things that they could buy at Walmart or Kohl's. They have to save money here. But it's a dangerous time in our economy with inflation not really slowing down and the United States government not being able to do anything. Now you have a big threat of hyperinflation that could be coming this year. Hyperinflation basically means that prices are getting out of control in every single market. We're talking 10% plus for everything that we buy. And like I said, that could be coming in 2022. Now, I will say the Ukraine-Russia conflict has kind of cooled off over the past few days. As of February 15th, Russia has actually started to bring back some of its troops from the Ukraine border, but not all of them. And just to be clear, things are still super hot right now. If things get worse there, that could have repercussions for every single country in the entire world, which ultimately means you can expect inflation to continue to rise, and you can continue to expect big economic shifts for our country in general. Things aren't going to be like they used to be anymore. Businesses are gearing up for a massive change. But how much things will actually change, well, that's kind of up in the air right now. But now I want to hear from you on this issue. What do you think is going to happen to our economy in 2022? Do you think that this big shift is going to continue? Do you think that inflation and the Ukraine-Russia situation is only going to get worse? And do you think that because of everything that's going on, small businesses might get deleted in 2022? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. I hope you liked this video. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything happening 7 days a week on this channel, I've got a brand new upload for you right here. So be sure to check that out before you go. Thank you so much for watching. Be kind out there, and I'll see you all in the next one.